Hello and welcome to A Accounting Tutorials. Today we are continuing our series on IAS 16 Property, Plant and Equipment. In this video, I want us to look at the format of PPE schedule. That is the format of Property, Plant and Equipment schedule. This schedule, it is a tool that is used in published accounts in determining the carrying amount of PPE item that will be recognized in the final statement of financial position. Is that okay? Sometimes when we are solving questions on final account for publications or account for publications, we are being required to prepare a PPE schedule. Even if we weren't asked to prepare PPE schedule, it is prudent to prepare a PPE schedule in order to bring all items of PPE under one schedule and then try to determine their carrying amount that will be recognized in the financial statement. Is that okay? So the main reason for preparing a PPE schedule is to help us ascertain the carrying amount of PPE items that will be recognized in the financial statement. So we look at a PPE schedule. Is that okay? So we have PPE schedule. So PPE schedule. So the PPE schedule, let's consider 3 different assets as an item of PPE. Okay, so let's talk about motor vehicle. Okay, so we have motor vehicle. Let's talk about equipment. Let's talk about building. Then we talk about the total. So all in dollars. All right. This PPE schedule is in 2 forms. Okay, we will talk about the cost component of the PPE schedule. After that, we talk about the depreciation component. Okay, then after that, we take the depreciation component from the cost component in order to determine the carrying amount of the PPE item. But one thing I want you to understand is that assets that are categorized under this PPE schedule are items of PPE. Okay, these assets should be regulated by IAS system under Property, Plant and Equipment. So if an asset, for instance, is an investment property, it shouldn't be included in a PPE schedule. Some assets may be an investment property. For instance, a building can be an investment property that can be held for rental purposes or for capital appreciation. For such assets, it shouldn't be included under PPE schedule. Okay, so all assets that are brings here are only item of PPE. If the asset is not an item of PPE, it shouldn't come here. So take note, investment property is not part of PPE schedule. Is that okay? So all this is under IAS 16. Is that okay? So it's under IAS 16. So we talk about the cost component of the assets. Then we talked about the balance brought forward. Okay, when I talk of the balance brought forward, you see, when we are preparing our final account in the trial balance of the assets, the original cost of the assets is the balance brought forward. All right, so in the trial balance, the cost of the asset becomes the balance brought forward. Then you bring the total as well. After the balance brought forward, we have 3 things to consider. Okay, we consider if there is any addition, if there is any disposal, and if there is any revaluation. These are the 3 things we consider under the cost. Is that okay? So let's say there is an addition. Okay, so addition. So when we acquired an asset, okay, the cost at which we acquired an asset should be added to the balance brought forward. So let's say we acquired an asset, we didn't acquire this, so we have the total. Is this clear? So the cost at which we incurred on the acquisition of the asset should be recorded, and if there is any disposal has to do with sale of assets. So when we sell an asset, the cost of the asset should be recorded and subtracted. For instance, the cost of an asset is 1,000 for 2015. Then we sold off this asset for $1,200 in 2017. So if there is accumulated depreciation on this asset of, let's say, 100, We take out the depreciation to arrive at 900 as the carrying amount. We compare the carrying amount with the price at which we dispose of the asset, then there will be profit on disposal of 300. Our focus here is not on the price at which we dispose of the asset, nor the profit or the carrying amount. Our focus here is on the cost. So the cost of the asset that we dispose of, we record it here and we subtract. Let's say we didn't dispose of this, we dispose of this. So the total here will be in bracket. Is this clear? That is good. So after looking at the disposal, we can talk about revaluation. So with revaluation, at the end of the financial year, an expert will come in to revalue the asset of the business. For instance, when we value an asset value at the beginning is 100, subsequently becomes 120. That is an increase in revaluation of 20. This is what we call revaluation surplus. So when we have revaluation surplus, we add it to the cost. So let's say we have revaluation surplus, we don't have, then we have the total. So revaluation surplus is added. Sometimes we may revalue the asset and we may get a loss on revaluation. So let's say 90. So the difference here is 10. This is a reduction in revaluation. We call it revaluation deficit. So revaluation deficit. For revaluation deficit, we take it out, we subtract. So let's say we have the revaluation deficit for this, and then we have the total. So that is all under the cost aspect. Okay, so after doing these things, then we add to arrive at the total. We add this, that is this plus this minus this plus this minus this, then we get a total. Okay, then we underline it once. So this becomes the balance at close. So let's represent this to be A. After looking at the cost component, then we come to depreciation. With depreciation, the first thing we talk about here is the balance brought forward. The balance brought forward here is the accumulated depreciation or the provision for depreciation in the trial balance. Okay, when we are solving a final account for publications, in the trial balance there are accumulated depreciation or provision for depreciation for this asset. So you bring them. We bring the balances. Okay. So if an asset doesn't have balance, you don't need to bring anything. Is that okay? After this, what we need to consider is disposal. Okay, if we dispose of any asset, we need to consider it. So let's talk about disposal. You see, this asset that we've disposed of here, we recorded the cost under cost. But when we come to under depreciation, the depreciation charge or the accumulated depreciation on the asset we dispose, we also record it here as part of the depreciation. So as we are subtracting the cost of the assets that we dispose of from the cost, we also subtract its accumulated depreciation. So if an asset cost $1,000, then we sold it out, we record the cost here. There is an accumulated depreciation on this asset of $200. We also need to subtract. So for accumulated depreciation for the disposed assets, we subtract. Okay, we subtract. Is that okay? And if there is a depreciation charge, so we talk about the annual depreciation charge. Annual depreciation charge should be also included. Okay, at the end of the period, we need to calculate the annual depreciation on the asset. And this calculation is the only thing that will be done outside. All this will be in the format. But for annual depreciation, you need to understand the 1 month ownership and the policies to calculate the annual depreciation. So after you are able to calculate the annual depreciation, you need to also include it under the depreciation. Okay, after that, then we sum them up. So this plus this minus this, then we record. So this becomes the balance at close. The balance at close for depreciation, let's say that is B. So we subtract the B, that is the depreciation at close, from the cost at close. So we subtract B from A, that is A. So we will get an answer. You will underline it twice. That is A minus B. And this becomes the carrying amount. This is what we are looking for, the carrying amount. It is the carrying amount that we will recognize in the final statement of financial position. Is that okay? So that we come and pick the total carrying amount. The total carrying amount is this. We come and pick this total carrying amount, and we will recognize this in the financial statement. And this annual depreciation charge here, the total will also be treated as an expense in the statement of profit or loss and other comprehensive income. So our aim here is to determine the carrying amount, and we had it, and the annual depreciation charge as well. So this is a formal way of preparing a PPE schedule. This will help you to get an accurate figure for the carrying amount. Someone can decide to do a scatter calculation somewhere, but sometimes it will be very difficult for you to do this scattered and come and add and get the exact figure for carrying amount. So I will recommend this PPE schedule to you to keep using when you are preparing an account for publication and you are being asked to prepare a PPE schedule. So basically, this is how we prepare a PPE schedule under IAS 16. So our next video, we will be looking at a full practice question, very comprehensive one, and try to solve to enhance our understanding on this PPE schedule. So after we've understand this PPE schedule very well, we won't have any problem when we are solving final account for publications to get a carrying amount for the PPE. But note, investment properties are not part of this PPE schedule, and other assets that are not under IAS 16 should not be included over here. Until we meet for our next video, I think it is bye for now. But remember to subscribe to my channel as well.